What is going on, investors? Time to talk about Bank of America Corporation, ticker symbol a BAC. They reported earnings this morning. We'll get into those in just a second. We'll also take a look at the stock chart. Take a look. It's on a key level here. We'll see about that. Now, they did make some news outside of earnings. They declared an 18-cent dividend, which is in line with the previous. Maybe that's why the stock is selling off a little bit, 1.5%. Maybe investors wanted a little bit more there. Now, they did announce this buyback through March 31st, 2021, which is a really short time frame, $2.9 billion authorized buyback of the common stock. So that's kind of nice, and a little bit extra for share-based compensation. So if you're not sure about these buybacks, I mean, part of it is to manipulate the EPS, but some of it too is the executives get paid with shares of Bank of America. And what do they want to do when they get the shares? They want to sell it into the buyback so they can buy a new Rolex or a new Ferrari. So they authorized a little bit of that as well. But this is a very short time frame on this this buyback. So you only get about 2 months to execute a $2.9 billion. Now, they don't have to execute it. They don't have to execute it at all, but it is authorized by the board. So we'll see what happens there. That could create some buying opportunities for the stock. Bank of America's Q4 showed stabilizing loan demand and strong markets. What I thought was interesting is deposits rose 1.7 trillion year over year. Loan deposit or loans, basically loan demand was basically flat. When we jump over the earnings, we'll see evidence of that. But deposits are way up. So it kind of gives you a tale of two economies. You have some people out there that are definitely struggling to make rent, things like that. They're on unemployment. But then there's a fair amount of consumers out there that have more deposits in their bank year over year because people are just saving their money. So we'll see what happens there. Now, from a financial perspective, from a valuation perspective, Bank of America is coming in actually a little hot. Okay, right now, I always take a look at banks. I compare them to themselves. If you've been following this channel, that's typically what I do. And we take a look at price to tangible book when we look at a bank, because if you liquidate the bank's assets, you basically get a tangible book value, and any premium you pay over that is the price to tangible book. And we're sitting at a 1.62 of price to tangible book. And you see, anytime we've gotten up into this 1.75, this is a 5-year chart here. Anytime we've approached that level, which we are approaching now on Bank of America, the stock, or at least the price to tangible book, has corrected. So we'll see if that's the case. I don't necessarily see this pushing up. I don't necessarily see the momentum unless you get interest rate momentum, which I just don't necessarily think we're going to see here in the next 12 months. Unless you get that, I think it's going to be tough to push this up over the 1.75 tangible book. Again, this is just a piece of the pie. If you want to add to your shares of Bank of America, you got to factor in the buyback, the dividend, your holding period, and the stock chart, and the fundamentals, which we'll talk about here in a second. This is just one small piece, but it is, in my opinion, not a buy signal from that sense. So moving over to the financials. So we've got year ended here, so we can see here, but we've also got the fourth quarter. This is the most recent period here. We've got the third quarter, so quarter over quarter, and then year over year, you go back a year here. So we'll take a look at total revenues here. We'll just look at it just broadly here. We went from 91 down to 85. So we lost that's about $6 billion off our total revenues. We see quarter over quarter, we're essentially flat. Year over year, we're down about 10%. So still recovering, I would say, at Bank of America, but they've done a nice job here. Now, take a look at our expenses here. These are all our expenses for running a bank. It's a big bank. Keeping in mind, for year over year, we've shed off we'll call it about $5.5 billion in revenue, but our expenses actually went up just marginally. Okay, that's essentially flat. We went from 55 to 55.2. Now, quarter over quarter, we're down. Year over year, we're flat. So the Bank of America is doing a nice job keeping expenses essentially in line. So moving down into our income. So take a look at how badly this got hammered. So we made income. We got $32 billion in operating income before taxes last year. This year, $19 billion, way down. How come it's way down? It's because of these provision for credit losses right here. So we've talked about this on the show when we've talked about the banks, is they bolstered up their credit losses. This is money that they set aside. It's not money that goes out the door. It's money that is set aside for what the bank believes is coming credit losses, people defaulting on credit cards, car loans, auto loans, whatever it might be. 2023, they're anticipating a larger demand of credit losses. And we see here, we went from 3.5 billion all the way up to 11.3. So they set aside like over 3 times, almost 4 times more money for credit losses in 2020 than they did 2019. But the trend is reversing. We see here in the third quarter, they set aside about 1.39, went all the way down to 53 million. That's way less. Okay, it's even less than the fourth quarter of 2019, where we were sitting at 941. So they've pulled that back. The algorithms, the computer programs that they have to calculate this stuff is pulling this back. Now, we didn't see them add this back in. I think JP Morgan actually added that back in. So it did impact our income before taxes down here. So, because that comes in on as an expense. Again, this money is not flowing in. It could be potentially added back at a future date, but just keep that in mind. We came in the quarter 6.1. That's over the previous quarter where we earned 4.5, but it's down year over year where we made 8.1. So again, recovering still, but we'll see what happens with this, credit losses. They still have a fair amount of that sitting on the balance sheet. We'll see if they have to use that or if they can add that back in. Now, we've got our average common shares. Again, expect this to go down if they execute on that buyback. Expect that to go down, very nicely at some point. Now, return on average assets, 0.78%. Okay. Typically, Bank of America runs in this 1.15. We see here last year they were at 1.13. In the full year for 2019, they were 1.14. We're all the way down at 0.67%. So they're running at a really low margin here on their return on assets. Expect that to tick up at some point. Obviously, if you get interest rates to tick up, which I don't know if anybody's necessarily predicting it anytime soon, but if that does happen, expect that to tick up nicely. Now, we're at a critical level in terms of this stock price. Okay, we see here, we drew this trend line. It was kind of a line in the sand here, just barely, but it is proven over the last couple trading days. I'm actually on a weekly chart, so this is actually over the last couple of weeks. Above, the stock has had trouble getting above 33. Now, can the buyback propel this above 33? That is possible. We'll see what happens. If they were able to execute that very well and there's not a lot of selling into the buyback, yes. And any peak up over 33 on a fairly significant momentum and volume could project us all the way back up to these highs that, before the virus and things like that, up at 35. And the momentum, and depending on how strong that move is, could get us above that. So that's one scenario that could happen at this level. The other scenario is that just sellers step in. All these sellers back here, they've kind of had their money trapped in Bank of America for a while. They want to get out. And as soon as this stock peaks up here, they step in and sell. And so that's possible too. This stock could come back down here and reverse. Lower levels into the $30 range. I'd say 10% lower to where we're at now. A little bit closer to where this moving average is, which is $28, $29. Anywhere pullback into that range, in my opinion, would set up somewhat of a buying opportunity for Bank of America. Very bearish situation is you have this gap here and the stock comes back all the way down here and fills this gap. You'd see very significant support for this at 23, but you'd have to have a market reversal in this one. You'd have to have things really, really get bad, and chances are you'd look through your whole portfolio and everything would be getting hammered, and you might not want to step in and get Bank of America. You might have like 10 other stocks that you'd want to get into at that point. But in the shorter term, this one's kind of teetering on an edge. It either wants to poke through here. The momentum obviously is indicating that the stock is on a really strong uptrend here. We'll see if it's able to break through all the sellers that have stepped in up here and push through these highs. If not, it'll get rejected. I think it could create a buying opportunity. If you're bullish banks, if you're bullish the economy, especially the United States economy, and eventually interest rates. I don't necessarily think you have to be bullish interest rates to jump on a bank stock, but that would definitely help. So that was Bank of America. Hopefully you guys are doing well out there. We'll be back with more earnings this week. Got Netflix, got some exciting ones coming at you this week. Hang in there. Hopefully you guys have a great week.